Art, it's great to talk to you on such an important day and week. You've long said you've wanted a washout, you've wanted a little panic, 9-to-1 down day, VIX to 40. Would you take 33?
Well, I think we're getting there, Carl, but I think what you're seeing is a kind of bipolar market. The internal technicals are such that we're just screaming for a bear market bounce, one of those 4%, 5% move over a couple of days, kind of like what we saw in June. And yet the headlines, particularly the problems in the currencies and the bond yields, have not held up. So we had the Bank of England bailed everybody out this morning. Relative to this bipolarity, look at Monday and Tuesday. We started out strongly better in the morning, and then they faded and reversed, and yet we didn't get into a full trap door. So I think what the viewers want to do now is watch what the market does after 11:30 when the European markets close. See what happens with U.S. yields. Do they start to move back up, assuming that the benefit of the Bank of England is perhaps not there? And I think what happens after 11:30 today could be a little bit critical. Market's screaming for a big rally, and yet we're not getting cooperation from the headlines.
Yeah, it kind of reminds me of what you said on Friday, which was watch if we don't bounce as Europe closes, afternoon could be tough, and that's exactly what happened.
And that will be what certainly I'll be watching. I think the influence of Europe, things we haven't seen popping around in a while, Carl, that arcane things like credit default swaps on a lot of the European instruments. I don't know that we're looking on the verge of a Lehman-like event, but certainly things in Europe, after the elections in Italy, I've never seen the IMF talk to a G7 nation the way they talk to the new administration in England. I mean, they made them look like, come on, you're a banana republic. Get together. And this tax cut was being roundly criticized, which is very unusual. So I'm going to keep my eye on Europe because I think it is going to be a key second half to what we're doing here.